What if I told you that your first $1,000 could be the most important money you ever invest, not because of how much it earns today, but because of what it teaches you for the next 30 years? Most people wait too long. They think they need $10,000, wait $50,000, or some perfect time to start. But the truth is, starting small and starting smart beats waiting every single time. In this video, I'm going to show you exactly how to invest your first $1,000 step by step. Even if you're a complete beginner in the US, no jargon, no confusing strategies, just a clear plan you can follow today. Let's get into it. Section 1. Build a strong foundation first. Before you even think about investing, you need to make sure your financial foundation is solid. This is where most beginners go wrong. They jump into stocks without preparing. Here's what you need to check first. Do you have at least a small emergency fund? Even $500 to $1,000 saved separately can protect you. Are you carrying high-interest debt like credit cards? If yes, paying that off might give you a better return than investing. Do you have a stable income? If you're good on these three, then you're ready. Think of it this way. Investing without a safety net is like building a house on sand. It might work for a while, but eventually it can collapse. Once your base is strong, your $1,000 can actually start working for you instead of being pulled out in emergencies. Section 2. Choose the right investment account. Now that you're ready, the next step is choosing where to invest. In the US, you have a few main options. 1. Brokerage account. This is the most flexible option. You can invest in stocks, ETFs, and more, and withdraw anytime. Perfect for beginners. 2. Roth IRA. If you're thinking long-term, and you should be, this is powerful. Your investments grow tax-free, and withdrawals in retirement are also tax-free. 3. 401k, if your employer offers it. If you get a company match, this is basically free money. Always prioritize this first. If you're just starting with $1,000 and want flexibility, a brokerage account is a great place to begin. If your goal is retirement, go with a Roth IRA. The key is, don't overthink it. Pick one and start. Section 3. Don't pick random stocks. Start with ETFs. This is where beginners often make a big mistake, trying to pick the next big stock. Instead, start with something safer and smarter. ETFs, exchange-traded funds. ETFs are like baskets of stocks. Instead of betting on one company, you're investing in hundreds at once. For example, broad market ETFs track the entire US stock market. S&P 500 ETFs track the top 500 companies. Why this matters? Less risk than individual stocks. Instant diversification, lower stress. With your first $1,000, a simple strategy could be: put 70 to 80% into a broad market ETF. Put the remaining 20 to 30% into something slightly more growth-focused, like a tech-focused ETF. This way, you're balancing safety and growth from day one. Section 4. Use dollar cost averaging. Here's something that will save you a lot of stress. You don't need to invest all $1,000 at once. Instead, use something called dollar cost averaging. This means you invest your money in chunks over time. For example, invest $250 every week for 4 weeks, or $500 now and $500 next month. Why this works? You reduce the risk of investing at the wrong time. You smooth out market ups and downs. You build a habit of consistent investing. The market will always go up and down. That's normal. What matters is staying consistent. Think of investing like going to the gym. One intense workout doesn't change your life, but showing up regularly does. Section 5. Think long-term, not quick money. This is the mindset shift that separates successful investors from everyone else. Your first $1,000 is not about getting rich quickly. It's about starting a system that grows over time. If you invest $1,000 today and add even $200 per month consistently over time, with compounding, you could build serious wealth. But here's the catch. You need patience. The market will drop sometimes. You might see your $1,000 become $900. That's normal. Don't panic. Historically, the market has always recovered and grown over the long term. The biggest mistake beginners make is selling during dips, chasing hype stocks, expecting fast profits. Instead, focus on consistency, discipline. This is time in the market. Because time, not timing, is what builds wealth. So let's quickly recap your plan for investing your first $1,000. Build your financial foundation. Choose the right account. Start with ETFs, not random stocks. Use dollar cost averaging. Stay focused on long-term growth. That's it. Simple, practical, and powerful. Now here's your next step. Don't just watch this video and move on. Take 10 minutes today. Open an investment account. Transfer your first amount, even if it's just $100, and start. Because the hardest part of investing is starting. If this video helped you, make sure to like, subscribe, and share it with someone who's still waiting to invest their first $1,000. And if you want, I can also break down exactly which ETFs to pick and how to build a beginner portfolio. Just let me know in the comments. See you in the next video.